So Reddit had a huge Q2 for 2025, and it resulted in a huge spike in their stock. They jumped as much as 20% based on really strong sales and guidance in Q2. Revenue grew 78% year over year in the second quarter and was 17% above consensus estimates, which is the biggest beat they've had as a public company. So they are actually up 6.96% today, and in the past 5 days up 32.74%. So right around from the 31st of July up to August 1st, they had a huge spike because of their Q2 results. So of course the question is whether or not we should buy them for the long term. Now if you look at their guidance for Q3 2025, which is also a big indicator of whether or not people want to buy or sell the stock around their quarterly mark, is whether or not they actually believe as a company that they are going to have a great Q3. So we've had some where, like Spotify, for instance, recently had a pretty big dip because they missed on estimates, but also they kind of lowered expectations for Q3. We've had some other ones like that where even if they do well in a quarter, if they lower their guidance for the next quarter, a lot of times there's a big sell-off. So with Reddit, they've had a massive amount of buys recently, and not only did they beat on estimates, but they anticipate a substantial year-over-year revenue growth of 54% to 56% or so. So they are actually pretty bullish on Q3 themselves as a company. Now, obviously, if you're thinking about investing in Reddit, another thing you have to understand is that this is a company, it's kind of a social media platform. It basically took all these forum ideas and put them into one platform, basically making forums obsolete because people can now just discuss topics that they want to discuss. You follow communities based around that topic and you post all sorts of stuff and comment. So a lot of people actually go specifically for Reddit results when they search. They're kind of a competitor to something like Google or even ChatGPT. People like to search for Reddit user consensus or comments on a certain topic if they have a question. That's why a lot of times when you type something in Google, people are like, well, what's the best way to do X, Y, and Z? And then they'll put Reddit at the end so that Reddit pops up at the top of search results. So because they are mostly a social platform, their main form of business is advertising. Now, the thing about that may limit them, because what else are they going to make money for other than advertising? They don't really sell their own products. They don't really sell Reddit generated content. Everything is user generated. They do have premium subscriptions, but that's mostly for removing ads. So really everything is centered around advertising for this company and requiring millions and millions and millions of people to continue to use it heavily as a part of their day-to-day life. So now let's get more into the numbers with Reddit. So they have a very high PE ratio right now at 178.16 according to Google Finance. We'll get to the one on Robinhood here in a second, which sometimes can be different. You have kind of a trailing PE ratio versus like a forward PE ratio. Dividend yield here, they don't have a dividend yield, so this is another growth stock that you're really wanting to just multiply over time. You're not taking any sort of like payments out of it unless you are actually selling. So they've done really well in the past week or so. But if you look at, say, like this past 6 months, they're actually still down 6% in the past 6 months. Year to date, they're up 21.61%, up 255% in the past year. And they don't actually have enough information. They haven't been public long enough to have a past 5-year estimate here for their earnings or for their price appreciation for their stock. But they have obviously done really well at 338% since they went public just a year or two ago. If you compare that with VOO, which is the gold standard for stocks, you're looking at, if you look at the past 6 months, you are better off with VOO. But if you look at year to date, if you look at the past year and even the past 5 years, when you have even more of a sample size with the S&P 500, more years of growth, they are still beating the S&P 500. If you look at their assets versus liabilities, a really good distribution there. 2.63 billion assets versus 245 million in liabilities. If you look at price to book here, price to book is not too bad here. It can be very high for price to book on some companies, especially tech companies, but there are some that have been a little bit higher than them recently. Like for instance, Nvidia had like a 40 something price to book last time I checked. But if you look at their assets or their return on assets, it's pretty solid in the decent range, I would say. Return on assets, usually 5 to 10% is pretty decent, and they have a 6.68%. Return on capital, pretty similar. They are maybe slightly on the lower range of solid or good, so you might call them decent or average for return on capital. But if you look at net income, cash from operations, cash from investing, net change in cash, all of that's really good. Revenue, everything looks really good, of course, as well. You can see everything's in the green right now. And of course, we do have some more information on Reddit. Like for instance, let's see how they've done in the past quarter. They're up 78% in the past quarter, the past 3 months. Very good there, of course, beating the S&P 500 pretty easily. They say their price to earnings ratio is a 159.23. So either way, it's still high. Not quite as high as the one on Google Finance, but still quite high. A lot of companies or a lot of investors look for something around the 20 to 30 range or lower. And this is okay as long as they are getting massive returns. And, you know, a lot of times tech companies are the only ones you might consider with a price to earnings ratio that high. So let's see what hedge funds are doing right now. If you look at hedge funds, we don't have what they're doing in Q2 yet, unfortunately, because obviously Q2 just kind of got wrapped up for most companies. But if you look at Q1, more of them were buying than selling at a 62% to 38% ratio of buy to sell. And in Q4 of last year, 85% buy, 15% sell. We do have 12 insiders that says they sold a total of 321,000 shares of Reddit in the last 3 months. But obviously, this is probably before their Q2 earnings call and all of that. So this may go in the other direction, but there are more sells than buys here. Pretty easily for insiders in 2025. If you look at analyst ratings, they have a 62% buy score, which is pretty good. It's above 50%, so that's good. But 29 different analysts have rated it. We do have a 34.5% hold score. It's a pretty high hold score for a growth stock. And then if you look at the sell score, 3.4%, not too much to worry about there. Now, if you look at earnings, estimated versus actual, they're just kind of barely getting above estimated earnings every single time over the last few quarters. So not necessarily blowing numbers out of the water, but still, they're doing what you have to do. They're beating estimates. They're growing. I think one question is what else can they really add to their business model? Now, if we look at Guru Focus, this is one of the better sources I found to find the company's EV to EBITDA ratio, which can be a little bit of a raw ratio, which is enterprise value versus the earnings before interest, taxes, depreciation, and amortization. So this is kind of like before they could do any sort of accounting or tax loopholes or anything that makes it look like their earnings are more than they actually are. And so they have maybe more of a good number to compare to something like a PE ratio. Now, obviously, this is extremely high. This is one of the highest EV to EBITDA ratios I've seen since I've been tracking this for different stocks. Now, they actually, if you compare this to the industry, that's kind of how you know whether it's high or not. It's really industry based. So that's another reason why I like GuruFocus.com. They tell you how it compares to the other companies in the same industry, which this would be the interactive media industry. They are worse than 99.2% of 374 companies in the similar industry. So obviously, the industry median being 11.89 versus them being 225.66 is kind of worrisome. Now, obviously, this isn't the end-all be-all. It's just one small metric of many that you look at when you're investing. But again, could be a lot better and is extremely high for whatever reason. Now, as far as the PE ratio, or the PEG ratio, I should say. If you look at the forecast 12-month forward PEG ratio on NASDAQ for Reddit Inc., they have a 4.78 PEG ratio, which is actually kind of high. Anything over like a 2 is typically considered kind of overvalued. So another indicator that maybe they are overvalued at the current price versus what they are earning or their growth rate over time. That doesn't necessarily mean it's a sell. It just means it may not be the best bargain right now. If you look at earnings per share estimated versus reported, you can get some estimates and you can see how they've done in the past versus how they might do according to analysts going into the future. And they go 4 quarters into the future here. They beat on all of these actually. So estimated was expected to be negative. That's what kind of threw me off. And then if you look at how they've done, they've had a pretty good margin of beating on earnings. I mean, if you look at the Reddit graph, it doesn't look as good with the dots, the way they do it. But if you look at, another thing I like to look at here is whether or not analysts think it's going to keep going up. They keep raising the expectations, or are they lowering expectations over time? So they're raising expectations in Q3 by quite a bit. Q4, they're expecting Reddit to do really well, lowering it a little bit in Q1, but still above Q1 of 2025 by a significant margin. And if you're looking at year over year, it looks like they really do believe Reddit's going to keep growing. So if you kept looking at the way this graph looks, most likely Q3 would be significantly higher than Q2 26, and Q4 would be significantly higher than Q3 2026. That seems to be kind of how they look at Reddit and how they do from quarter to quarter as opposed from just like year to year. So good signs, in other words, from analysts for what they project is going to happen. As far as what's like to work here, are they a well-run organization? What do employees think about that? Reddit has a 3.9 out of 5-star rating on Glassdoor for what it's like to work here. 62% would recommend working here to a friend. That's pretty good. That's well above 50%. And 72% approve of Steve Huffman as the CEO, which is a really good score. Anything around, like I would say like 66% or higher is a pretty good score for a company rating their CEO. You don't see them being nominated for best places to work or anything like that, but overall their scores are solid. So when I actually look at a bunch of different factors here and I determine whether or not I think they're a buy, hold, or sell, obviously this is not financial advice. This is how I specifically look at it for my portfolio. Your portfolio might be totally different. And again, you also need to look at the distribution, the diversity of your portfolio. You don't want to go all in necessarily on one type of industry necessarily. So again, that's up to you. If you want to be super aggressive and go all in on tech companies, that's up to you. But for me, I actually have Reddit as a hold right now, and there are some concerns with whether or not this is a good price to buy Reddit, whether or not their growth in price will keep going up. Like if you were to buy right now when they're up 33% or so in the past week, it might be a bad time to buy. There's a strong chance that there's a dip right after that, after the Q2 high from their earnings call kind of fades away and people start to kind of sell off a little bit or take profit. So I think they're a hold. If I actually had Reddit stock, I would probably hold on to it. I mean, it looks really good, but what concerns me is like, well, the price right now may not be optimal for buying Reddit. It may have a correction, even though the growth long-term will probably be solid. Again, there could be a correction. Maybe you want to hold off a little bit before you call them a buy. But also, what are they going to do long-term that really excites you other than just increasing users and increasing ad revenue? I don't know what else they're going to do. I don't know what are they going to invent something? Are they going to come up with some sort of new subscription? This might just be all you're ever going to get with Reddit. Is that good or bad? Do you see that as bullish or bearish? I don't know. It depends on how you view that. But to me, the one thing that worries me with Reddit, I think Reddit's great, but are they just going to keep getting more and more users? Are they going to just keep increasing ad revenue and that's it? And you're holding on to that one specific thing that they do when they can't really make their own content for a platform that's all user-generated content. For instance, you have some of these other platforms, they started creating their own content in-house, like Netflix, even though it's a different type of company. It really helped their stock grow, and it helped them reach new heights. I'm not sure what else Reddit's really going to do. They're just going to have to hope that things just continue going the way they're going, and that they don't have to come up with anything that they have to sell.